Welcome to XM.com for today's daily market comment by Raf Boyajian. I'm Cristina Marujos. The improved risk tone is holding ahead of the all-important inflation numbers out of the United States later today. Stocks on Wall Street jumped higher for a second day on Wednesday, erasing the losses from late last week when markets were roiled from surging bond yields. The rally in yields appears to be cooling, and this is aiding the rebound in equities, which are proving to be surprisingly resilient. The generally upbeat earnings are keeping Wall Street afloat, and European earnings have been impressive too. The S&P 500 closed up 0.9%, and the Nasdaq Composite rallied 2%. Their futures were last trading slightly in negative territory, though stocks in Asia and Europe were mostly higher. The caution could increase in the run-up to the inflation prints, which are expected to show America's Consumer Price Index hitting a fresh 40-year peak of 7.3%. A lot is riding on today's CPI report as the Fed has become very data-dependent, and there is huge uncertainty around what path the federal funds rate will follow over the next year or two. If there's any sign in the numbers that inflation is peaking, Treasury yields could significantly pull back from their current elevated levels, weighing on the US dollar. The dollar index is consolidating this week as investors weigh the varying inflation dynamics in each region. If inflation peaks in the United States before other countries, that could dampen the greenback's outlook in the short to medium term. However, uncertainty about how much central banks will have to tighten has never been greater, as the inflation picture is extremely foggy right now. This uncertainty could be what's driving gold higher lately, as the precious metal is scaling two-week highs today. The euro has been stuck in a tight range this week and was last trading around $1.1435. Sterling was firmer, and the Australian and New Zealand dollars were both extending their February upswing on Thursday, tracking the broader improvement in risk appetite. Oil prices, meanwhile, were steadier, edging slightly higher after finding support from the surprise drawdown in U.S. crude oil inventories in yesterday's weekly report. However, any upside is likely to be weak, as investors are waiting to see whether there's any prospect of Iranian sanctions being lifted. This was the Daily Market Comment here at XM.com.